Okay, welcome to our instructional event, how to get started with profiling tools. As we get started, we always want to be mindful of the risk involved in markets, of the things that you have control over. You don't have control over price. You do have control over what you risk and where you place that risk at. So we were mindful of that and also mindful that past performance is not indicative of future results. Again, we're going to talk about how to get started with profiling tools. And one of the key questions to ask yourself as we're going through this is, should profiling of an auction be part of my trading methodology and approach? So that's what we're going to look to assess and make a decision around. I'm also assuming that you don't know anything about profiling or maybe very little and are trying to kind of take that into the next level. Just some quick welcome introductions, just so you know who's talking to you. This is me. I'm Josh Schuler, I'm the founder of Trade Profile. Have kind of gone from a retail side all the way to the institutional side. A real game changer for me was in 2012 when I got exposed to using profiling tools, and that really accelerated everything that I was doing in a very meaningful way. And what it did was it helped me transition from being a technical trader or a fundamental trader into one that was focused on behavior. So, as our friend Tom says, fundamentalists interpret balance sheets. So they look for where's the opportunity with respect to some fundamental valuation. A technician will look at specific price arrangement or technical indicators and so forth. But those who use the profile are really looking at trying to assess behavior, which I would call is something of a third way. It's not uniquely fundamental. It's not uniquely technical, but it's somewhere in the middle. And so that is where I think some of the real edge around these tools resides. Now, just a top-down agenda, what we're going to go through. One, we're going to talk about auctions. We're going to talk about defining value to an auction. We're going to talk about seeing instead of hearing. We're going to talk about time at price, which is defined as market profile. We're going to talk about volume at price, which is defined as volume profile. And then we're going to talk about opportunities, expectations, and guidelines when using these tools, along with some key questions to ask yourself whenever you are using these tools. And then we'll follow it with some Q&A. So expecting to spend about 20 to 30 minutes getting through the top half and then leave the rest to look at some live auctions and take some questions. Okay, so let's talk about auctions just as a start. So this was if you don't think about the markets in this way, they really are auctions. This was, I mean, I'm ashamed to say that it took me a couple years of trading to realize that when I was in front of the market, what I was looking at is I was looking at an auction. And the funny thing about that, why that was such an aha moment for me, is that once I understood that it was an auction, I knew that I know how auctions work. Auctions exist all over our civilizations. They exist in housing markets as a form of auction. There are art auctions. There's platforms like eBay where you can have auctions around various things. But you know how auctions work. You also know that auctions are behavioral. How an auction goes depends on a number of factors. What is the thing being auctioned? Who shows up at the auction? How much capital does that person have? Right? How much time is there to make a decision around this thing will drive what ultimately happens in the auction. And essentially in any auction, whether it's a housing market or an eBay or heavy equipment or cattle auction, livestock, there's really just four behaviors. The four behaviors is that an auction begins, right? The thing out there is the thing offered, the auction begins, and then there's a move. There's a movement in price as that auction takes place. And eventually, what's going to happen is that we're going to run out of participants. And if it's a continuous auction where price can go both ways, such as a housing auction, we might get some counter activity where the auction shuts off directionally, and then it forms a range where people are, kind of, playing around until the next move begins. All of this happens from the beginning to the move to this rest and then testing of those ranges. But ultimately, the auction will end when they reach equilibrium. And this is something to carry forward as we spend the rest of the session together is to think about this idea of auctions ending when they reach equilibrium. And these tools that we're going to look at help us see that. Also around auctions, you know that you make better decisions when you can see where other auction participants are active or inactive. So if you can see who's done what, that's very actionable information for you as a participant to know where do you want to be active or inactive. And a lot of that has to do with this idea of value. So I want to talk about defining value in an auction, right? So how do you know you got a good deal, a good price? You would typically say well, it was a good value. Well, how do you know that there's a good value? Auctions often follow some they often follow this curve that we see in most product life cycles. Is it that they begin, there's someone early to the auction, then there's kind of a early majority that jumps in, then there's a late majority, and then there's the laggard. Auctions end when that last person who gives the worst price is into the auction. And then there's a bulk of trade where most people reside that there's a decent degree of fair value. And how an auction behaves relative to value is insightful. So where most people interact, that's how we would define value within a specific time frame. So if that's the case, then it gets pretty easy for me to know how I want to behave. So I can either buy at or below value or sell at or above value. So if I'm using a housing market, for example, if I know that the comp, which is the term often used in valuations of housing auctions, if I know that the comp price for a house or a flat is at a certain price right now, and that's a going market price, I see property that's offered, I can make a decision relative to where other similar real estate is being transacted to know whether that's a good price and that's a good value. The other way that I can be inactive around that is I could buy if I believe that value will develop higher. So if I believe that in the future there are going to be more transactions at a higher price, I can enter the auction, or I can sell if I believe that value will develop lower later in the auction. Now, taking what we know around auction behaviors, when we think about the idea of seeing instead of hearing. For those who had the opportunity to trade on the floors in Chicago, one of the things that you found is that trading was more auditory than it was visual. When someone would come to the pit and when they were attracted to the pit or when they needed to stay away from the pit depended on the level of volume in the pit. If there was lots of competition for price, that means that there's a lot of people competing around a price. They're finding fair value there. It's really loud. If nobody wants to be active at those prices, then it's very quiet, okay? We don't have that same opportunity being electronic screen traders. So instead, we have to see instead of hear. And in fact, we have to learn to see inside the auction. So to get an example of what that looks like, so I've just got here a daily bar of the NASDAQ futures, okay? Many of you are familiar with a chart like this. Now, there's some information that we get from a chart such as this. A specific candlestick for each session is going to show us, for example, where was the open, where was the close, where was the high, where was the low, and the color is, did we close higher than the open or lower than the open? That gives us some information. That also we can see, we can see trends, we can see areas where there's a degree of consolidation or where the auction is kind of paused for a second. But if we could zero inside and look inside this, we can actually see more information. And what a profile chart does is it allows us to see inside and get greater information. So let's first talk about time at price, or what is referred to as a market profile graphic. So if I look at this same chart and I look at this as a market profile graphic, this is the exact same chart. It's, if I just zoom out here, what this is doing though is this is showing me the session as we're trading, and it's showing me where we are spending lots of time. Now, when I look at just a regular candlestick, I can't tell inside of that where were the specific prices that we spent a lot of time. However, when I look at this chart, I get to see more information about where participants were active or inactive. So yesterday, with the open here and the close here, I find that most of the activity took place down here. There was really not a lot of activity at all. We didn't spend hardly any time up there. Also, just from a sheer anatomy standpoint, all the market profile graphic does is it just arranges the range of price of 30-minute periods. So it's 30-minute sessions, and it's just there, and they can be numbers or letters, but it's just showing you the high and low for each 30-minute period as we go through the session. And then as we collapse this down, we get to see distributions. We get to see where there was concentration of price. Where were those specific active prices as the auction took place? Some of those prices, nobody did any business. Some of those prices, they did a lot of business. And what this is giving us is information about value. And then as we see this develop throughout the day, just here's an example. We can see how prices become of interest, where they are as they develop, and then continue to develop as the day goes on. And at each point, we can explode out of this, where we might look at a specific candlestick chart or something like that. But this is actually just collapsing those distributions down and showing us where were their prices higher relative to value and where are their prices lower relative to value. And in this sense, if you've ever studied statistics, the bell curve is your friend. So what we find in most auctions is that while there is a high price and there's a low price, there is often a price, well, there's always a price that becomes the most traded price. And that's the price that we call value, this price that we spend the most time at. We spend about 60% of the time, in fact, around that specific price. And that's meaningful in helping us understand where value is, so then I can make those decisions. Do I want to buy at or below value, or do I want to sell at or above value? Okay. Now, some of the anatomy of a market profile graphic, we're just going to walk through some of these things to know. TPOs. Okay, so each one of these specific little letters are what are referred to as a time price opportunity, meaning that's a price in time and it represents an opportunity. Okay, so if somebody says a TPO chart, or that's what that TPO means for, and that's what this is doing. This is looking at and assessing the auction relative to time. Now, we have the open. We also have something that is referred to as the initial balance. So that's the range of the first hour. So these are in 30-minute sessions. So A period, and again, it can be numbers or letters, A period and B period combined form what we call the initial balance. And then as the auction continues, we have, as is often the case, something that's determined to be the point of control. So that's the price where we have spent the most time. And so currently, right now, the most time has been right around 898 in the NASDAQ today. Then we have this time value area. So that's where we've spent 60%, 60 to 70% of our time within that normal distribution. Okay, so this is the value area high, this is the value area low. So what does that tell us right now? That tells us that in this auction, we're basically trading around value. We're not necessarily above value, we're not necessarily below value, we're just right around value. Okay, so that's meaningful information to you as a trader to know, how do I want to position myself? Then we collapse this down. Other anatomy that we get are something called single prints. So notice on this day, back here, this is actually last Friday, that there were areas where we only traded those prices in one 30-minute period. Think of that like a midday gap. So because we didn't check to see those prices in any other period, so we just ran right across them. Okay, so that gives us some information about how impulsive or how strong a specific market is. And then last are what we would call excess. Okay, so see here at the extreme of the profile, typically at the extreme of the profile, you'll get an area where you only have single prints. But these are not single prints in the middle of the profile, they're at the extremes, because what happens is we get to a price where we're not going to spend any more time. The auction is rejecting that price. And so that forms an upper bound to the auction, just as we have one. Just as we have the lower bound today in the auction. Again, meaningful information that's organized in a totally different way than you might look with a traditional candlestick, that gives you greater information on where are the other participants active, and I know where I want to be. For example, if I was just to look at this chart and say, hey, do you want to buy up here today? Do you want to buy 945 Qs? Why? Well, the reason that you'd want to buy would be that you would believe that value would develop somewhere else. However, notice how much time we're spending around here. So we'd have to spend the rest of the day up here to validate the opportunity. We're actually running out of time to be active at those higher prices. Okay, do I want to sell down here? Well, what would have to happen? I would have to have more time, and I'm already about 6 wide here. So I've spent half the day here. I'd have to spend the rest of the day at these other prices to validate value shifting down there. Okay, what might be a better approach to say is, okay, if I get up here and I know that we've not spent a lot of time here, that might be an advantageous place to sell. And if I get down here, that might be an advantageous place to buy, given that value is here. So we can use this time to help us make better decisions. If we're in the middle here, that's also meaningful. You could go either way, right? Which can inform how you manage risk around that. Okay, so this is a time chart. So when we talk about market profile, this is a market profile TPO graphic. There's different names for them. Some platforms like Thinkorswim call them monkey bars. Some will call it just market profile. But this is what we mean when we talk about a market profile. It's time at a specific price. And this is where the profiling began, with the original research that was done by Pete Stottlemyre at the Chicago Board of Trade, sought to graphically represent what was happening around prices behaviorally in the pits. So as there was a transition from pit trading to screen trading, this was a way to be able to replicate behaviorally what happened in the pits through the screens. So, for somebody who says, well, is this a valid approach? Hey, was trading in the pits valid? Yeah. And this is an effective way to arrange information of the auction so that you can make better decisions. Now, this is not the only way to use profiling tools. The other one is volume at price, which is one you've more likely seen and has a lot of interest. And so if we go back again to our chart here, so this gives us range of the day, but it doesn't really show us where people are spending a lot of volume. Okay, so the time we can see to some degree where there's some time being traded. We don't see a lot of volume. However, I can use volume profile to be able to see. So I could say, for example, this high to this low, and then I see that there's a start of a move right in here, and I can look at the volume of trade at specific prices. Isn't it interesting that this move that began back here towards the end of March began right at the most traded price by volume of this last consolidated range? That gives us really good and meaningful information. And then if we look at this move up until we saw some shut off here, we see a node kind of right around 824 area. And then notice how the auction since then has really respected this node. And that's what these, in terms of anatomy of volume profile is just showing us the accumulation of volume at a price. Now, just like there was a time point of control, there's a volume point of control, and then there are things like high volume nodes and low volume nodes. Okay, so I can blend all of these together. So if here's our time profile, I can blend these together and get both volume and time information. So in this sense, I actually have the same TPO chart, but I also have the profile colored by where the accumulation of volume is. Now, when the profile was originally put together, the TPO graphic, they used time as an approximation for volume because they couldn't reconcile volume information until the end of the day. So they used time as an approximation of that. Okay? So you may come across this argument of which is better, time at price or volume at price. And I would argue that volume at price is better, more accurate, because when Stottlemyre was originally using the tool, he was trying to identify where was the volume by using time as an approximation of that. Now, it doesn't negate the value of using time because time helps us see structure of the auction that volume profile doesn't. And when I often see traders who are using volume profile, which we have a composite, so this is a multi-session composite of volume at price, and you can see why you can see this big 920 area here in the queues is the most traded price. And we've spent a lot of time trading around that. We traded it a couple times a day. We're back to it again. We've got another node here around 960. And that's another way to respect value in the auction. So where is the most traded price represents value to this auction. So you can see as we've traded lower, we've come back to it. As we traded higher, we've come back to it. We've continued to respect this as value to the auction. And we can add additional information to that as well. So I can look at, for example, I can look at the development of the overnight auction. So this is a market profile graphic of the overnight auction to give me, how did we develop overnight? I can also look intraday, and I can look at a composite between the overnight and the daytime. So now I'm blending both market profile and volume profile together to give me significant information potentially about how I want to be active. So I've got, again, this is the overnight session. This is a market profile graphic. You can see where we opened overnight. Here's where we closed overnight, right? This is a volume profile of today's session. I can see the specific contract volume at each price. And then I can see where we're developing in time, and that is colored to match what's happening from a volume standpoint. So I can see where those really key nodes are. I can see where there's not a lot of activity very quickly, right? So, if I get, for example, if I'm long up into this area, there's not a lot of participants here, this would be a great spot to cover that long, right? Or to potentially think about going back short. Or if I'm down here, I'm away from the bulk of value, that could be an opportunity, depending on time, to trade back up towards the bulk as this thing is looking to find equilibrium. Okay, if you go back and look at most historical charts, you're going to find there's an area that is big and fat. Now, there are more directional days. We've had several of them recently where the profiles are a little thinner. There's a different way to approach that. But by and large, when we find that we're trading back and forth across there, we're going to find that we have good location to exit longs above that, exit shorts below that, and not going to find a whole lot of edge in the middle. Okay, so now let's move on to talking about opportunities. We talked and expectations and some guidelines. Okay, first let's talk about opportunity, because opportunity is not consistent across prices. Okay, because we can see inside, we can see that some prices there's lots of activity and some prices there's not. So that the opportunity present at those prices are not the same. And that there's opportunity when price is in equilibrium with value, and there's opportunity when price is divergent from value. What do I mean by that? Okay, so like I said, we're right here basically trading at today's value. Okay, here's the most traded price of the cash session. Here's the most traded price of the full session. Okay, we're basically trading, right around value. Okay, there's an opportunity because from value, come moves. Okay, so there's an opportunity here. I could look for the short from this area. I could look from the high. That's a form of opportunity. The other opportunity is that I've already seen that as we've tried to trade lower today, we failed to build out value lower. We failed to build out value higher. So there's opportunity if I can get away from value, then I'm likely to trade back in. That would be price divergent from value. And depending on your style and approach, you can use that again. You can use that information to know, hey, this isn't a spot for me to be active. You can know this is a spot for me not to be active, or this is a spot where I need to pay attention. Okay, which is very different if you're just looking at traditional candlesticks, because in that sense, all of it is actionable, right? This is going to help you make better decisions because you're like, hey, I'm not in an area where it's as advantageous for me to be active depending on my playbook. Now, some expectations. Okay. So an auction can continue directionally so long as it can accept price and build value in that direction. Okay. An auction can continue directionally so long as it can accept price and build value in that direction. So if it can build value via time or volume in a direction, it can continue. In our vernacular, there's no such thing as oversold or overbought. There is accepted or rejected. We will facilitate trade until we can't. Okay, and that's a key insight that you get from approaching the auction this way, approaching markets this way, is that you're freed from the constraints of, oh, I've got an RSI indicator that says I'm overbought, or my MACD's cross. I mean, those are still all valid, but I can also find many examples when they don't work, because an auction can continue until it stops. Okay, now if an auction fails to build value directionally, it will return to prior established value. Okay, here's an example. This morning, we opened here. Okay, value from yesterday was here. Value from the multiple sessions is here. Notice how the auction opened and quickly auctioned back to prior value. That told you some information about this auction. It told you, hey, we're going to have to find some more sellers because they're not really interested in significantly trading away from value. We're immediately respecting prior value. Okay, so the inability to build value somewhere else. See the profile isn't fat down here. The profile's back here where prior value on a multi-time frame is. That's insightful into how the auction is behaving. We expect the auction to slow when returning to high volume nodes, and we expect the auction to bounce out of or slice through low volume areas. Okay, so one of the things that I had in my plan today was to watch activity around this 960 area. And why is that? Because that's a composite node, and I expected the auction to slow and have trouble getting through that. And because that represents an area where lots of participants have been active in the auction, buyers and sellers. So the reason that we get a build out in the profile is because we had both buying and selling active at that price. We get two-side activity at that price. That's the only way that the profile builds out in that way. So if I come back into that, my initial expectation is that I'm going to slow or chop around that area. Now, if I have a low volume area, so see here, I have a low volume area down here around 830. And notice how the auction a couple times, both yesterday and today, has struggled to get through that. So in true form of a low volume area, you're either going to come in and bounce out of it, or you're going to slice straight through it. Okay, so far, we've bounced out of it, we've bounced out of it. So think about what that's told you to the auction, is that the low volume area we've rejected, the high volume area we've continued to accept. So this auction is not interested in exploring new prices yet, right? At least at this point, we're not seeing that activity. So that's a healthy expectation. If something happened today and we reapproach this low and this low volume area, since we have now gone in here and out of it a couple times, would increase the probability that we'll just slice straight through it and then auction to the next area of volume, which is down here around 782. Okay, some additional guidelines to help you. When you come into a session, your first reference is prior value and will either be affirmed or replaced by developing value. So in this sense, when we came in today, looking at the NASDAQ, the key references for me were 920 because that was a composite value, and then yesterday's value right around 953. Okay, so those are prior value. Then what I'm looking for is where are we developing value today? So initially, it's how are we trading relative to yesterday's value. But then as the auction matures, we're going to find out, are we developing value in the similar spot or are we developing value somewhere else? On strong directional days where the profile is very thin, we develop value someplace else. Okay. Today, you can see that we're developing value fairly close to where we've been developing value on a multi-time frame. Now, we are developing value today lower than yesterday, but we first checked yesterday's value first. So you start, when you come to the auction, your first reference of value is where was yesterday's value, and then you're going to either affirm that or be replaced by developing value. We use volume profile to discern levels of interest to the auction and gauge acceptance. So if we can build out that histogram, that's accepting prices. If it's very thin, then we don't know if we're accepting those prices or not. We use market profile to discern levels as well and probabilities. Specifically, the probability that a specific price may or may not be in play in that session, as well as the structure of the auction at given prices. Okay, and so what I mean by that is the probability, for example. Okay, so we have this initial balance. So here's the high and low of that first hour. Okay, we've traded above that. We've had a little bit of range extension. If you go back 1,000 trading sessions or 5 years of data, you will find that 97% of the time we will trade either above the high or the low of that IB, that initial balance. Now, once we've traded that, the degree of extension is also something that we can measure. So if I took this range and I actually draw and measure, let's measure this range. Everybody tracking with me so far? Haven't lost anybody? Okay, here's that IB high. This is 50% extension, and then we can't even see it up here, would be 200%. So that'd basically be taking this IB and then doubling it, okay? The probability that we'll reach about 1.5, that IB, is around, depending on product, is 50 to 60% probability. A little bit higher in the ES versus the NASDAQ and some other products. The probability that we'll get to 2x the IB is around 17%. Probability that we get to 3x the IB is around 3%. Okay, so that sets probabilities and reasonable expectations for future behavior in the auction based on how we're behaving. All right, hang on a second, gang. I'm gonna cover some shorts here. Excellent. I'm covering some shorts because I'm below value. Okay, again, we look to buy at or below value. We look to sell at or above value. Similarly to any auction, we would buy if you believe value will develop higher, sell if you believe value will develop lower. So, like today, not very likely that we're going to be able to develop value lower. Does that mean that we can't go lower? No, it just means it's not very likely. Okay, and it's very possible that someone who pushes the short down here is going to get trapped because we're running out of time to develop value lower after we've already spent a significant portion of time and volume up here. See how the profile is tapered down here? We would have to build this out to accept these prices, and so far we're not doing that. So that helps me gauge where's the opportunity, especially in a day like today, which is very rotational. You can see that we're just trading back and forth across this price. If we have a more directional day, like if we go back to this session. You'll see how elongated the profile is with lots of holes in this, and it finally develops value later in the session after starting way down here. Okay, but very different profile from what we're seeing today. And we see with the market profile graphic as well, it allows us to categorize these profiles into day types and open types. There's about 5 classical open types and 7 day types that form. And these also help us get a sense for what we expect. So today, for example, we've had an open auction in range, A and B period, a lot of overlap, and we're inside of yesterday's prices. And we've extended the IB high, but we're spending most of the time inside the IB. That's a normal higher day. Okay, so the expectation with that is that we're not going to be able to get significant prices outside of this range unless there's some form of catalyst or change in the auction. Most likely we're going to continue to rotate back and forth as the day goes. Okay. Finally, some key questions to ask yourself whenever you're using the profile and profiling tools. One is, where are we accepting or rejecting prices? Related to that is, where is price in relationship to prior value, and where is price in relationship to developing value? Is price pulling value? Meaning, are we making directional excursions and then able to build value in those directions? Or is value pulling price? Are we unable to build value somewhere else and returning back to prior value? Is price defending value? Like, like if we come back to an area of value, are we defending that? Or are there anomalies in the structure? So like, are those single prints or pockets inside the profile that don't give us that typical bell curve that gives us an idea of who's active and what they're doing within the auction? Okay, so that's a very high level overview of the profile. Leave the rest of it to any questions that anybody's got. Happy to answer those. We can even talk more about today and potential opportunities and things like that. There's a lot of platforms that use these type of tools, and the idea is not to have to be specifically tied to a platform, but instead know what you're looking at. So if you know what you're looking at and what you desire to see, then you can come to a platform and build that platform in such a way, generally around these tools, so that you can see what you need to see so that you can make the decisions that you need to make. This platform here is called Window Trader. One of the things I love about this one is that this allows me to combine, what you might be able to see a lot of this information in multiple types of charts all together, but you have to look at all those charts. This one allows me to see all of it in one view, so that I can get a really good idea of, do I want to be active or not? And I can configure this around colors, which also helps me. So rather than having to maybe read a specific contract volume, I can see very clearly, hey, that's where value is. Here's where we're developing value. Here's where we're not. Here's where some big active participants are. Here's where they're not. Right. So I can even look inside of. I've got these 30-minute bars here, which have a volume histogram, and they just have a candle on them. But I can see, hey, there's some active participants down here. And the most active participants in this 30-minute period are actually at the bottom of this period. However, what I note is that it's some big buyers here. So it'll be interesting to watch, does this buyer step in? Was that somebody covering a short? Were they covering the short with me, or is that a new buyer? If it's a new buyer, we'll close above that and we'll rotate back up. But really, just to get started with profile, I mean, you don't have to have being able to see the structure through a TPO graphic and then be able to have a volume profile and then be able to have that either in the the day session and then across multiple sessions, gives you the context that you need to be able to make some better decisions. Great question. Is this effective to use with order flow? Yes, and in fact, let's clarify something. Seeing volume at price is order flow, right? I'm seeing where buyers and sellers were active. Now, when traders typically talk about order flow, they're talking about bid-ask delta, looking at the relationship of, okay, at that specific price, what were they doing? Okay, and so I actually have that delta information here. When we were looking at that, this is price delta. So at this high volume area, I found quite a bit of buying. Okay, this is cumulative delta for the period. This is cumulative delta for the full session. So positive numbers represent. So there's been more net buyers at these prices in this period, even then we're going lower. That's some interesting information. So yes, you absolutely lay on top of that to get an even further granularity. You can use typical order flow, bid-ask delta, footprint type information, especially when you're triggering. What I often encourage traders to do is to use the larger profile and the structure of the profile to know, hey, here's an area I want to be active, and I don't want to look at that smaller time frame stuff until it's an area that meets the criteria upon which that I want to be active. Then I'll go look at that smaller stuff. Because when you're looking at order flow components, you can find lots of reasons to be in a trade. But if you don't know where you are in relationship to how the auction is building value today relative to yesterday and the larger auction, you're my perspective is that you're missing a key component there that's going to lead to heightened consistency. Good question. Other questions? Would I replace bar charts with this? Absolutely. Yeah. Now I still use bar charts. Um, it's good always just kind of go and look at a larger time frame. Sometimes just even looking at price can be very insightful when you strip everything away. But then I'll look and say, okay, but where are key levels to the auction that the auction needs to hold to give me greater insight. Here's a good example. Let's I was thinking about this one. I mean, let's look at GameStop, for example, which has been a lot of interest this year. It looks like if I was a classic technical trader, okay, I would look like and say, oh, well, we're consolidating and we're getting ready to break out. Okay, you would look at that and say, there's a wedge. I'm very interested in this auction. However, if I add volume profile information, I find that even going back to where the big move started, I don't have a whole lot of volume in here relative to where we've been in the past. So maybe I'm not as excited about a breakout higher in GameStop because I don't have as many participants. And here's the thing, auctions, if an auction's going to go higher, what does it need? It needs more buyers, right? So when I see a profile that's very thin, I get suspect of its ability to go higher. So for example, let's look at we'll just use this one. Trying to find the best, but okay, I'm pretty bullish on Bitcoin. Why am I bullish on Bitcoin? Because as it's made this move in 2021, notice that we have about as much volume built out here as we had from prior nodes. So this auction is accepting higher prices. That's giving me a lot of. It's also telling me, hey, where are spots that I want to respect? Like where would I get nervous with Bitcoin? Well, I really don't want to get Bitcoin, that much below 44K. I've got key nodes that we came into and defended. We're back to 56K. That's an area that would be a reasonable expectation from this node to this node. What's next is up here. But as soon as I get up above 65K, I start getting thin again. And so if we run straight to 70K and this is real thin, then the auction either has to trade sideways and build out value, or it's going to correct and come back to value, which helps me make decisions in the auction. Great question. Other questions? Oh, great question. So what's the time frame of the volume profile on the right? So typically I keep about a week of data. In this sense, I'm actually including about a month of data. And the reason for that is that the most traded price for the past week and the most traded price for the last month are pretty much in agreement. So we have, as I zoom out here, you can see that we've been essentially trading in this range from really from last week's low. We traversed it this last week, but we've been in this range. And so this is really representing a profile of that whole range. As you know, I'm anticipating a move in the NASDAQ, higher or lower, is going to come from 920. You know, the next real push is going to come from 920. Now it's got to break. It's got to break that high. It's got to break that low. But it's going to start in here. I mean, could be starting today. We'll see. Yeah, and what do we do? I mean, we're a development firm. We're a skill development firm. So, you know, our job is to help traders who want to be active in markets make better decisions by learning to interpret tools like this and fold that in to their trading playbook. You know, when you look at this, anybody who trades, I don't know if you thought about this, like, but a trader is a storyteller, um, because we we don't know what's going to happen next. We really don't. It's anything is possible. Now we can reduce the probabilities of what happens next based on how we're behaving right now relative to what's happened in the past. Just like somebody from a literary sense, if you're an author, there are better storytellers than others because they understand the dynamics of where the story needs to go. As you read the auction and you see where other participants are positioned, that's going to give you information to make better decisions about where you want to position yourself relative to what's going to happen next in the auction. And that starts from a narrative standpoint. We'd say, okay, look, I mean, the longer I stay below 920, given that's value, the more bearish I get. Okay, so then the next question that I have is, how can I, you know, what playbook setup do I have that I can express inside of that narrative idea? You know, am I doing, you know, some type of option trade that, you know, is built around that 920 strike? Is there a directional trade? You know, what am I, you know, seeking to do? It starts with using these tools to get us an assessment of the auction narratively, and then based on that narrative, and then knowing also where would that narrative change, right? So if I wanted to be bearish here, what do I not want happen? I don't want acceptance back above 920. Like if I want the move to come from here, I want it to stay below 920, and I want them to continue with velocity and volume away from 920. That's what the story needs to be. So far, as the day has gone, you can see, you know, as we've made attempts lower, we've made shallower attempts lower. So it's harder to make that assessment. Okay, question: are you aware if traders use this for spread trading futures? Yes, they do. We use that. There are a couple different ways that you can do that. You can actually profile the spread, to note where that spread is in relationship to itself. You can also look at the legs of the trade to know when the spread is more likely to break. So say, for example, like I'm looking at copper versus gold right now, because copper is just, you know, copper is the new oil. There's lots of fundamental reasons why copper needs to go higher. But you know, I'm looking at, hey, can I you know, I'm looking at the profile on copper, and I'm going, man, we don't have any participants up there. I'm looking for a correction in copper. I can use the profile to time where that is, and then, you know, buy gold relative to that, looking at those specific products. So yes, you can absolutely use it to enhance spread trading. Great questions. Got about 10 more minutes. Any other questions? I mean, I wanted to do this just because there's more interest in profiling, and I don't find a lot of like, hey, can I get like an hour and just really get an idea of how to use these tools, or what even are these tools? A lot of people, it's like I'm looking at the matrix, right? Like, how do I read this? How do I interpret this? What is this that's actually happening? Seeing these things evolve and just answering some basic questions that I hope kind of whet your interest for where you could take it. And there's lots of nuance around this. You know, with the traders that we work with, there's about 16 concepts or principles that we build out around this, and some of it takes 4 months to get through to really get their arm around that. But this at least lets you know, hey, I think, and again, this goes back to the top. The question was, do you think that this would add value to your approach? Would this give you greater insight to what you're doing? Would it, you know, as an added tool? You know, I would encourage you. whether you do anything with us or not, I'd encourage you to use these tools. I think you're going to make better decisions, and you're going to be in the markets longer, and that's one of the objectives. The objectives is to stay in the game. Yeah, our development courses are, I would argue that they're rather robust. They were, so the genesis of what we teach traders came from my experience running a managed futures desk for an introducing broker of RJ O'Brien, and what we gave to our brokers as they were helping clients. So it really kind of unpacks all of that, and all that's noted around, how do we essentially, when we come into an auction, a couple questions that we ask is, what direction is the auction attempting to go? How good of a job is it doing at it? If I ask those questions of the Nasdaq here, I'd say, well, like on the multi-sessions time frame, this auction is not really going anywhere, right? We're in a range. How good of a job is it doing it? Well, it's building a lot of value around 920. So that tells me until I can break out of this range, I'd look great for multi-session longs down around the bottom of this range. I'd look great for multi-session shorts around the top of this range, unless we can develop value somewhere else. But we look at using this approach to help build a specific trader's playbook so that they can jump in every day and have an idea that has some reasonable expectation of a positive outcome. Yes, I will be putting this out as this recording. I mean, everyone that's registered, but also to the broader public as well. Yeah, I mean, using again a bar chart or candle, it gives you information, right? It is meaningful information. The range relative to prior range, opens, closes, that is insightful. I think this just enhances it quite a bit. And it's pulling forward what we saw in the pits, which was very uh, emotive uh, and behavioral, because they knew where were people active and where were they not. Okay, good question. Any showing how using a statistic might give you a setup to skew probabilities in your favor? Yeah. So, for example, I mean today, um, like so far, we've done about 100 points in the queues, right? A little bit more than 100 points. We were expecting around 200. So we still have a bit of expected range in play. Um, we have extended the IB, but we didn't get much extension past that. So we didn't get to 1.5. We are below a key composite node, and we are also month end and weekend, and we had a whole bunch of catalysts this week that we're now done, right? Um, there is a statistic, and that is the idea of neutral behavior. So the neutral behavior is that if we extend the IB in both directions, so if we take out the IB high and the IB low, this only occurs in about 30% of all trading sessions. Um, and if once we've extended in one direction and then extend the other direction, it's unlikely that's likely to spur some type of move. It's possible that we could fall out of bed, like if we can take out these lows and get into this deposit, that we would take out this low, which also would be approaching the current weekly lows and an approach toward this key composite, which would be within 2x of the IB as well as our expected range. So that would be an IB go with trade targeting 8 or 782. Now here's the caveat on that. I got to break this IB, and then once that happens, because that would set control back in favor of the sellers, we use IB extension as a way to see, who is more powerful, buyers or sellers. So far, buyers have had the upper hand. Sellers have not been getting paid, aside from renting the downside in the short term. Okay, but if we can take out that IB low and approach those weekly lows at the end of the week, we could see some acceleration. So in that sense, now I want to be careful. If we take out the IB low, I don't want trade back above this area. So if I get back above the bulk of this volume here, then I've likely trapped again, and we could run right back to 920. If we break this, I want to see velocity. I want to see volume. I want to see them doing more volume as we approach this 872. Once we get outside of this IB, we're not going to come back in it. So that's kind of the narrative that I would be building. The setup is an IB extension go with. So I'm taking, when the IB breaks, two questions you can ask is, do I go with that or do I fade it? And depending on where that happens within the broader context, within time, within velocity and tempo, can tell me, is it better to go with it? Is it better to fade it? Okay. Like right now, I got to tell you, like buyers are getting nervous because, but so far, even though they're getting nervous, there's still no damage done, and we still have a higher low relative to where we've been. Okay, so that's one way to use some of those behavioral statistics around a setup, around the broader context to generate an idea. Yeah, that is like the most simple way that you can use a profile is to know, hey, 97% of the time I'm going to extend that IB high or low. Then my question is, do I fade that or do I go with that? Yeah. So any lag on data using Amazon Workspaces? There's not. I use that as part of my redundancy plan so that if I have a machine go down, I can easily use the client on multiple machines. It's got a fiber connection to that server, so we're lightning fast. Works great. I love it. It's not necessarily a profiling thing, but it's kind of a fun technical thing that I just from a disaster recovery standpoint. Okay, gang, 2 more minutes. Any final questions, and then we'll let everybody go right at the top of the hour. Thanks for your questions. Thanks for your interest. Again, I hope this has been helpful and just giving you a new way. For some of you, a new way to look at the markets. For some of you who have been like, okay, there's this profiling thing. I know people are, but how do I even think about that or use that? I know when I was getting started, it was really frustrating. I knew that this was a tool that was being used on the floors as they were transitioning to screens. Um, I know that the institutional side traders that I knew were using these tools, but I just didn't know how to turn that into a trade, turn it into an idea. And at the end of the day, that's the whole point, right? Is I'm interpreting this, but then I got to turn it into a trade and an idea and which is based off of an expectation of what's likely to occur in the option. Oh, I mean, this is a great question. So managing risk. So the question is, how do I manage risk using the tool? Okay, so depending on the specific setup. So like, let's say for example, that I believed that that my setup trade was a move from balance and a multi-composite. So that the trade would be multi-composite move from balance from this 920. Okay, so if this is the move, it's going to be a long move. I'm gonna get last week's low. So the question would be, how would I manage risk? Well, the idea is the move is from 920. So where should trade price not come back through? 920. So I'm going to hide my stop right behind 920, and I'm short the trade unless they go back above 920. We can use these high volume nodes and hide stops behind them because once as the auction will move from value to value, and what's so cool, this happens on all time frames. So be it a 30-minute price, be it a longer term. I mean, just look here. Let's go back and look at this 30-minute. Again, this isn't a setup for me, but let's assume, so we saw a bunch of all buyers were at this volume. This is all buyers, okay? So I want these buyers to defend in this area of volume. So if I want to be long back to developing value today, I'm gonna hide my stop right behind there. I don't want them to trade through these buyers. Right? If they trade through that, then that puts pressure on these buyers and we can push back lower. So you can identify these areas and hide stops behind them, make them come back through them. And also sometimes they'll come through it, wipe everybody out, and then trade back above it. You can always re-enter and then reestablish a place below the spot that they push through. It's one example of how you can manage risk around that. I mean, the other way, I mean, one of the setups that we use is something called an IB go with extension. So we have IB high extension here. We have value here. If I got a test, of the open, and let's say the open held, because I don't believe that they're going to take out the low. That's a low probability statistic. then I could look for a trigger back down here where sellers have not been getting paid, and look for opportunity back in this direction and have a stop one tick below the low. So good question. All right, everybody. Again, thanks for your interest. Thanks for your questions. Thanks for spending time with me. I hope that that's been helpful. We'll put the recording out there and make that available for anyone. Just a couple next steps for you. As you're thinking about how do I add this in, is one, just to go back and review this webinar when you get the recording. Review your prior trades in relation to what was happening in the profile. So if you have access to profiling tools, go back and look at your prior trades, like ones that worked, ones that didn't. Sometimes when you overlay profile information on top of that, it's going to be like scales falling from your eyes. You're going to be like, oh my gosh, that's no wonder that trade didn't work. Or, that's why that trade did work. Review places in the auction that moves began. So when you see like some big move start, go back and see what happened in the profile there. You're going to be amazed. Review places in the auction where we exhausted, where the auction failed to continue to get directional excursion. It will also be very insightful when you overlay profile information on that. If you're not yet, you can connect with us on Twitter or YouTube. I know some of you have done that. And then if you want to dive more into some development, we have a development pathway, these 16 modules that we cover to build your understanding of the auction. And we give everybody an opportunity to spend a week with us where we look at how to use this stuff within the auction and translate that into my daily trade plan, my playbook of trades. How do I find areas of interest, and how do I build out my approach? That's always an option that's out there. If you have any other questions or need help, you can always send us an email at team@tradewithprofile.com or call and text us at this number. And that is how to get started with profiling tools. Thanks again for your interest. Talk to you later. Very well, everybody.